My name is Greg Thompson of Thompson Wealth Management Solutions at RBC Dominion Securities. And once again, we're having another Fast Five. Today we have my associate Rob with us, as well as Alex and Simone from the asset management company Triasima, based out of Montreal. You know, we always want to give people different views and different thoughts of what's going on in the market. And, you know, we've been watching what Triasima has been doing, and we thought they'd be interesting to talk to. So we'd like to welcome Alex and Simone from Montreal, a very rainy, icy Montreal today, I hear.
Thank you, Greg.
Thank you, Greg.
Nice. So, Simone, you're a portfolio manager with Triasima. You're in client relations.
Yep.
And Simone, tell me a little bit about your background and how long you've been with Triasima.
Sure. So I've been with Triasima for over 9 years now. Started my career in sort of like a middle office role at National Bank, and then found a job here after a lot of interviews. Started as an analyst, was effectively covering sort of half the world, so half the geographies, half the sectors, because we were a small firm at the time. But then we grew and hired a lot of more people. And then about 4 years ago, became a portfolio manager, and I've been heavily involved since in the small cap strategy to start with. And then over the last few years, more and more sort of up the market cap scheme, and then now I've been working mostly on the large cap as well, since we got someone that retired just last year. And then I'm involved in that strategy along with Scott Collins and Ale Chabot, which are two of the co-founders. And then, yeah, it's been a great journey. I keep saying the learning curve is super steep here, because you get to work with sort of the CEO and the co-CIOs every single day. So you go from an analyst to a PM sort of real fast. And it's been great over the years.
Now, you know, what caught my eye with your firm is I have a love of quant, and, you know, quantitative analysis is not something that a lot of people talk about often. So, you know, how do you work in quant into your management style, and what do you do that complements the quant?
Yeah, absolutely. So the way we manage money, we use what we call this 3-pillar approach. And then, so the genesis of that is because our founder, again, Andre, he's an engineer by trade. And he thought when he first got involved in portfolio management, he thought, you know what, there's way too much art and emotion in the portfolio management process. So I need to streamline that and sort of remove the behavioral biases as much as I can. So he came up with that strategy. So the 3-pillar is fundamental, quantitative, and trend. And then, so what it means is that 2 of those pillars, which is quantitative and trend, are emotionless. Like, it is what it is. We come up with the score, and there's no arguing to have, you know, like, it is what it is. Whether I like a stock or someone else doesn't like it, or vice versa, it doesn't matter. The score is what it is. And so when we're looking at quant, for example, the filters we're using are different from a strategy to another, but typically what we're going to be focusing on are things of quality and growth. So think, especially in Canada, like earnings revision, EPS growth and sales growth over time. ROE will be really important too. And so we're looking at rate of change too, so that really matters. But one thing that is really important to note that is that we're not excluding any securities. Because if that was the case, if we were just focusing on, let's call it the top 50 of the screen, we could be missing on a lot of opportunities that are not necessarily ranking well in terms of quant, but could be great in terms of fundamental and trend, and they can be real big winners over time. Like, I like to give the example of Shopify that we bought years and years ago. Well, the quant was poor at the time, right? Because it was, yes, growing very fast, but unprofitable. And generally speaking, when you're unprofitable, you don't have a great quant rating. But the trend was great, and we met with the company. We loved the story. We loved the moat they were building and their vision. And then so we bought it shortly after the IPO, and, you know, the rest is history. We all know it's a great company now in Canada. But that's a little bit how we're using sort of the 3-pillar approach at the same time. And so it means that 2/3 of the process is emotionless, and it's fully automated at this point.
When we ran our quant fund, which unfortunately ended when we lost our data stream, I always used to explain quant as being Spock-like from the old Star Trek. No emotion, just the math.
Just the math.
Yeah.
Yeah, and then again, there's a lot of behavioral biases in the market. Like it's a market ran by mostly humans, and then who says humans says emotions, and sometimes we're not always rational, right? And then so we're just trying to put a little bit more science in the process.
Interesting.
So I have a question for you. You know, and you kind of overlapped a little bit on what I'm going to ask, but diversification is always important to investors and to our industry, and obviously there's many ways to diversify. But I wanted to ask, in the name of style diversification, could you enlighten us on how the Triasima portfolio would be different from and maybe complement, say, a dividend growth mandate or something more blue chip income oriented, based on just the fundamental analysis side?
Now, that's a super relevant question and a very important one to understand sort of why we're sort of, well, yes, we can be a core, but if we're not a core, we're certainly the second best complement you can have in a portfolio. And let me explain why. It's because a vast majority of managers in Canada are highly exposed to dividend value. This is highly typical in Canada. Because of our sort of trend factor that you're seeing in our methodology, we're highly momentum driven. So if you look at the whole landscape of factors, you can always expect us to be exposed to momentum and vast majority of the time exposed to growth too. And then right off the bat, those are two factors that there's not a ton of managers that are exposed to in Canada. And the reason why also we like momentum, it's not just because, there's something to be sold there. It's just because that's the best performing factor over the last 25 years in Canada. So the methodology naturally rotates toward what is working in the market and what the market is currently rewarding. And so that's why it's working. And so because of that, by naturally doing this and being exposed to the momentum factor, right off the bat, this gives you great diversification, or I guess perfect complement to virtually any other manager in Canada. I know Alex has done some great work on that on the correlation side, and we're pretty much negative. Like if you use us or the momentum factor, it's a negative correlation with whether you look at value most of the time, you look at dividend and factors from that nature. So yeah, it is a good way to diversify a portfolio from a factor perspective, at least.
Now, you mentioned that you're working with two of the other owners of the company, and can you give us some background on them?
Sure. So again, Triasima was founded a little bit over 25 years ago now. And so one thing that is important to note is that the track record you're seeing, everyone that has worked on that track record is still here. Yes, we've got someone that retired last year, but no portfolio manager ever sort of left the firm to go somewhere else. So that never happened. So it just sort of speak to how people like working here, but also the track record you're seeing is still very much in place by all the people that are here. So that's one thing to note. And so these two guys, they got started actually in both of them in corporate finance. And then they kind of like cross path very early on. Scott was, because Andre is older than Scott at this point. Andre came up really with the strategy, and he was first involved in portfolio management. And then he cross path with Scott Collins and Redouane Kiredine too. He's the third founder. And then they started, the three of them, only the three of them at first 25 years ago, with very little assets. But everything was new at the time. Like momentum was not even a term in finance. If it was to be done today, Andre likes to say, we wouldn't call it a trend pillar, we would call it the momentum pillar, but it wasn't a thing back then. And then even quant, it existed obviously, but it was not very popular. Today there's a lot of quant-driven shops, right? That's all they do. There's many of them. Fundamental, it's been there for almost forever. But quant and trend certainly were not very popular. So it was very new at the time, and the fact to wanted to sort of put science in portfolio management process was certainly new at the time too. And by the time they started building a decent track record, they started garnering a lot of attention and getting a lot of assets. And yeah, we believe that in order to repeat that success that we have over time, the easiest way to have that is by having a process that is solid throughout time and it's highly repeatable. That's like by using those three methodology at the same time and doing it the same way we've been doing for a long time. By the way, not that we're sitting on our hands, we're always trying to make the methodology slightly better at the margin whenever we can by doing some enhancement. But it's been working, it's tried and true, and we just want to keep doing what we can do because we believe that's just the best way to add value over time. It's been working for a while now, and yeah, that's how the guys built the track record, and the whole team is still very much intact today.
Oh, great. Okay, well, I do notice when I look at the activity and that you've shown us over time, there's definitely a lot more turnover than we have. Would you like to look at complementary styles? What can balance things that we do off and learn from that? So it's been a great chance to have a conversation with you guys and learn more about what you do and take a look at how you guys are managing. As you said, we're always trying to find a way to get better. So thank you so much for your time today. We really do appreciate it. And we'll probably talk to you guys again.
Thank you, Greg. Appreciate it.
Thank you, Greg. Thank you, Robert.
Thanks.